Global stocks mixed as dollar soars to fresh tops. Wall Street stocks suffered solid losses on Tuesday amid another surge in US Treasury yields. The yield on the 10-year Treasury jumped to 1.56%, its highest level since late June. The sentiment deteriorated after the Fed's Powell reiterated that the central bank was ready to start tapering soon. On the data front, U.S. consumer confidence declined for the third straight month in September. Against this backdrop, the S&P 500 plunged 2.04% to see its steepest drop since May. The tech-heavy Nasdaq Composite shed 2.83%, while the Dow Jones lost 1.6%. Asian stocks are mostly lower on Wednesday. Bucking the trend, however, Hong Kong's Hang Seng Index gained 0.58% after Evergrande Group said it was selling a stake in Shanghai Bank for $1.5 billion. Evergrande's Hong Kong traded shares jumped over 12% on the announcement. Meanwhile, Tokyo's Nikkei 225 sank 2.12%, the Kospi and Seoul dropped 1.22%, and the Shanghai Composite Index shed 1.83%. In Europe, equities climbed after a steep sell-off, with the Pan-European Stock 600 index rising 0.6% on Wednesday. As for the data, economic sentiment index in the Eurozone climbed to 117.8 in September from 117.6 in August. As a reminder, the index rose to a record high of 119.0 in July. In individual stocks, AstraZeneca shares jumped 3.5% after the UK pharmaceutical group said it would acquire the rest of Cilium Biosciences for $150 million. ASM International rallied nearly 4% after the company raised its third-quarter order intake guidance. Wall Street stocks recovered partially on Wednesday to finish mixed. The benchmark US Treasury yields edged higher for a seventh straight day. The Dow Jones and the S&P 500 gained 0.26% and 0.16% respectively, while the Nasdaq Composite shed 0.24%. On the data front, U.S. pending home sales rose 8.1% in August, far exceeding expectations of a 0.4% increase. Meanwhile, Federal Reserve Chairman Jerome Powell said that high U.S. inflation shortages could last into the early part of 2022. In currencies, the dollar extended gains to fresh highs on Wednesday, sending the Euro USD below 1.16, the lowest since mid-2020, and the pound sterling USD toward the 1.34 figure last seen in December 2020. Elevated returns on Treasury yields is the main dollar driver. Earlier on Thursday, the greenback is giving some ground while staying elevated across the board. Tracking Wall Street price action, Asian markets showed a mixed trend on Thursday. Worries about Evergrande's default risk eased somewhat after the property giant reported plans to settle its debt with a Chinese bank. However, the company's shares fell nearly 5% amid reports that it was likely to miss another payment on a bond. On the positive side, the yield on the 10-year Treasury slipped early Thursday to 1.51% from 1.53%. Still, the MSCI's broadest index of Asia-Pacific shares outside Japan declined 0.06%. Tokyo's Nikkei 225 index fell 0.12% after the data showed that Japan's industrial output fell for the second straight month in August, while retail sales slipped for the first time in 6 months. In China, the Shanghai Composite Index gained 0.77%, while Australia's S&P ASX 200 added nearly 1.5%. Meanwhile, oil prices gained in volatile trading on Wednesday but remained off intraday highs seen above the $78 figure. The EIA reported that U.S. crude inventories rose by 4.6 million barrels for the week ending September 24th. Brent crude managed to notch some gains even as crude inventories climbed for the first time in 8 weeks, while the USD index strengthened to the highest level in about a year. Early on Thursday, oil prices retained a modest bullish bias, challenging the $78 figure again. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.